So mortgage credit has really been one of the most compelling value propositions we think in the reinsurance industry in the past couple of years. It's not materially correlated to other lines of business. So for reinsurers that write that line of business, there's less volatility in earnings and they have to hold less capital even in their other lines of business. Credit quality remains historically strong, and there are guardrails in place to assure that that continues through the cycle. And the performance to date has really been reflective of that high credit quality. In the Guy Carpenter analysis of these deals going forward, we're projecting that in a base case scenario of the GSE transactions that have been written, all layers, all treaties will be profitable. So it's really been one of the best lines of business to write in the last couple of years, and we think so going forward as well. There's been several developments in the last 10 years that helped the mortgage segment. For the GSE CRT segment, the watershed development was the FHFA mandate for the GSEs to use both the capital markets and the reinsurance markets to establish the credit risk transfer program. In addition to that, there were some regulations for the US PMIs, the private mortgage insurer eligibility requirements that set the capital standards and recognized reinsurance. So from a GSE perspective, from a PMI perspective, there were capital regulations in place. And then the big thing that the GSEs did was release all their data historically. What was really proprietary in years past was now open in the public, very rich data sets going back 20 years that allowed reinsurers to evaluate the risk historically and develop models going forward. So if you look at the growth of the CRT market, it's been tremendous. To date, from 2013 to now, through this year, there will have been 92 transactions issued. In this last year alone, there'll be about 20 transactions from Fannie and Freddie. And if you let those premiums play out under a base case going all the way back, you'll have about $5.9 billion of premium to the reinsurance market. In the PMI space in the US, you've had 27 transactions that have been issued, and there's another 30 to 40% of premium there. And then internationally, there are also a half a dozen programs that are programmatically being placed. So from a growth perspective, reinsurers can choose from these different segments and compile a nice little portfolio of mortgage credit business. I think in the GSE CRT space, it will be pretty significant. What needs to be done is the knowledge gap needs to be closed, and brokers can help with that as well as MGUs. But the brokers at the end of the day represent the clients, but we're happy to sit down with reinsurers, educate them on the process. But the MGUs really represent the reinsurers. And today there are 4 MGUs/advisors out there. There are 2 MIs, Essent and Arch, providing this service. There's a global reinsurer, TransRe, and then there's an actuarial firm that really specializes in mortgage credit, Milliman, to help reinsurers. So we do think for those newer reinsurers or reinsurers that have just entered the market, there's some value there to spend a little bit of time and money with the MGUs to help them get up to speed and get their frameworks in place.